Hey everybody, this is Christian from Hertz, Tribeca Trade Group with your end of day market recap, and we'll kind of go through a couple of these charts for today. We'll start with the S&P. There's a lot of a lot of different moves going on. We're going to talk about energy. We're going to talk about some of the better performing sectors. But first things first, looking at the S&P, we had a little bit of volatility again today. It seems like towards the towards the middle of the day, we're getting a little bit of volatility. Just could be a little bit of selling. You can see the volume kind of pick up here. This has been happening the last couple of days. Not exactly the same time every day, but in the afternoon, we start to see some big red candles form, and it appears that there's a seller present. There's a decent seller that's pressing to the downside, and then it seems like they're done for the day. They just had a little bit of equities to sell, and then it kind of bases out for a little bit as the seller's done, and then we see some buying at the end of the day. So it's a combination of there's a seller present in the market who just comes in quickly, maybe sells some S&P futures, and then kind of moves on. And the buyers seem to want to step in whenever this takes place. This has been happening, I'd say, all week long. Not exactly the same exact format, but you started to see this a little bit yesterday. And we've seen this just a couple times. Here's another one. I think this is, I'm not sure what day this is, but you get the gist of this, is that somebody's coming in and kind of selling in the afternoon, right when you think markets are going to recover a little bit. And, we're just not seeing the momentum. I think this was a chart from, or the action either from yesterday or the day before, where we're just not ready to rally. So, sitting on your hands is the best thing right now. In other types of markets, and what also kind of tells me that the market is just in a little bit of a digestion phase is you look at bonds and you look at gold. This is something I've been talking about the last couple of days, but there's no change here. Gold and bonds are moving in tandem. They're both finished down like over 0.5% again. So it doesn't seem like there's any major rotation out of equities going on. Maybe just a little bit of putting money on the sidelines, but certainly people are not going into gold and they're not going into bonds right now. You could look at the performance, which I think I should have up here. Look at gold. 1, 2, 3, 4, 5, 6, 7 down days in a row. You can look at TLT. Oops, I just want TLT. TLT 1, 2, 3, 4 days down. So they're moving together. I don't quite understand why they're doing it, but to me it just tells me, hey, it's not like people are rushing out of equities and going other places in this market. Perhaps just a little bit into cash. Same thing with the VIX. The VIX was up 3.7%. Again, from the lows. There's no trade to really do here in VXX. I hear people talking about the VXX. I mean, come on a day where we go to the VXX, and what did it do today? It finished down on the day. Nobody's buying big trades in VXX. So sometimes you hear this stuff on Twitter, and people really don't know what they're talking about. I have to say, there was a little bit of puts that went up. There was 7,000. Is this what people are talking about? 7,000 VXX March calls bought for 4 cents. 28,000 trade. So I saw somebody jumping up and down about, hey, somebody's buying VXX today, and that was a good tell. A $28,000 trade, you have to be kidding me. And I know people are looking for themes in this market, but that's not it. Especially with VXX finishing down on the day. So nobody is taking a big swing at a VIX position today. And again, if you look at the actual instrument of the VIX, this is going to oscillate between going up and down a couple percent every day, but we don't see a dramatic spike. The VIX right now is at 1230. So you got to be kidding me. If somebody's buying, I just don't see that being a theme right now. I think we're still kind of in a digestion mode. I think some people are unwinding some longs in some sectors. You could just take a look at what's been going on in the metals and the commodity space, in addition to oil, and you could see that there's some liquidation going on there. It doesn't mean that everybody's rushing for the exits in everything. It just means there's a little bit of profit taking going on. So where I started was the S&P chart. This is a positive to go lower in the beginning of the day or at some point in the day and finish kind of on the highs. You kind of have a floating hammer bar. These are generally pretty good once especially you're maintaining the trend. We touched the 20 period exponential moving average. I've been talking all along for the last couple weeks that whenever the yellow line gets way above the blue, usually we come back. The yellow line usually comes back and meets the blue. So we're kind of doing that now. It's not fully there. It could be that we might have a nice day tomorrow. I'm not fully convinced of that yet because if you look at small caps, they're still they did not finish like S&P and they did not finish like the Qs. So we'll have to see if we get, they tried to go in the beginning of the day and like a lot of names, I really didn't do a lot of trading this morning because we saw this in several sectors. First couple bars, and this has been a pattern. So it's kind of like, fool me once, shame on you, fool me twice, and what's the expression? Shame on me, right? Because it seems like in the beginning of the day, there's a couple buyers that come in, and then that's it. There's no momentum. So this happened yesterday with small caps. We got to the top of value, and we failed. And today we started the day below value. We got to the bottom of value and failed. So I looked at a couple things like Amazon today. Amazon had a couple green bars. If you want to scalp really quickly on the first 5 minute bar and then sell it 5 minutes later, I guess that's the trade to do right now. That's a really difficult trade, and I don't really recommend. I'm not making any recommendations here, but that's a really, really tough and fast trade to be in and out of something like in about 10 minutes, 5-10 minutes. So if you want to scalp like that, you can. It's difficult, but this is exactly what Amazon did yesterday too. Same type of price action. Amazon's still finishing up on the day, but if you're looking to day trade this move, it's really, really difficult, I would say, to do it because we're not getting those big trending days. A couple sectors that started to outperform again today. They're stalling right at the top of value on the 5 minute bar. So there's some strength here. Then there's a little bit of a weakness, but it just tells me when we see this, when you start to see the names that start in the beginning of the day positive and have a little bit of strength, but they can't get out of the range of the day, which is the red lines, the top of value. The momentum is just not there in the marketplace. So my point of saying this is don't push something that's not there, and it hasn't been there this week. It's not there. So in the morning, what we do is we talk about levels where I care and levels for us to get out of range, and we haven't hit that all week long. There's been obviously a couple single names that are doing that, but for the most part, the majority of the names are stuck in a range, and every time they try to rally, they fail. So again, the takeaway from this is the market's not ready to take that next step higher yet. So stay patient and look, mark your levels, put alerts out there for when things are going to prove you wrong, which is kind of what I'm waiting for. Again, going back to small caps, having them finish close to the lows just tells me that we may not be exactly out of the woods yet in small caps. Wait for maybe a close back inside of value tomorrow. Again, it's kind of mixed. When you go back to the S&P and the Qs, you get some positives there. The fact that we're hanging in here and kind of a floating hammer bar, I think that's a positive. So positive there, but negative in small caps. Energy names, look at oil. Oil did finish off the lows. So not exactly a hammer bar here. I was expecting oil to go a little bit lower, maybe to 48, but we're holding there. So, watch this candle. It is below the 200-day moving average, so you want to respect that. And you want to wait, I think, for oil to get back above the 200-day moving average. If you look at XOP, this I would chalk up as a positive as well. Started the day much lower and finished actually up on the day, up 70 basis points. So still, you have to respect the 200-day moving average here and kind of analyze this group on a case-by-case situation. Same thing with XLE. Did finish off the lows, finished up 65 basis points. Not bad. But still underneath that 200-day moving average. So you can have these retests up to the 200-day moving average and fail. That remains to be seen. So you can't really get ahead of each other. You can't get ahead of let this market get ahead of itself in terms of making conclusions that aren't there yet. One name I did take today, we saw some ECA calls hammered yesterday. When I say hammered, I mean just a repeat call buyer. This was today's activity. This was yesterday's activity. So we'll see if the open interest increases to 50,000, but just very simple, a close back above the 200-day moving average. I took a shot at this, and if we close back below, the 200-day moving average, I'm out. And that'll be, should not be, knock on wood, if it does close below the 200-day moving average, I can get out pretty quickly. Or if I see that there's no way it's going to close back above the 200-day moving average. But that's what's trading. That's what's trading. What trading is about is taking some shots and having some defined risk, or knowing where the trade is not going to work. As soon as you get into the trade, that's the plan that you want to adhere to. So you want to take calculated risks and know exactly when that trade is going to fail. I did this the other day, and again, nobody's going to have all winners here. I took a trade the other day in FCX, and I said the same thing. If it stays above the 200-day moving average, hey, I'll stay long above it and let it run. However, 2 days later it failed, and I'm out. I closed it, moving on to something else. If FCX does come back and gets back above the 200-day moving average, hey, I'm all about giving it another shot. But you want to stick to your rules, especially with this market, especially with some sectors starting to break down a little bit. You don't know how long they're going to break down for. FCX, you could have said, hey, maybe it's going to hold here. Oh, it broke here. Oh, maybe it's going to hold here. Nope. Oh, maybe, so you want to make sure that in each one of these trades, especially in something that's correcting, you don't necessarily want to catch a falling knife, but if you are going to give something a shot where there's support, know exactly where you're going to get out. And then just to look, sorry, this video is a little bit longer than I thought I was going to go today, but then I also start to look as we start to see a couple sectors break down. You want to keep an eye on some of the sectors that have been really strong. So technology, while it's kind of stalled out here, you've got a lot of long wicks here. Certainly hasn't broken down here. I keep looking at semis to see if they're going to show some weakness, and if Thinkorswim will bring up SMH for me. I don't see it yet. You don't see any major breakdown here in semis. Kind of an ugly looking bar here, but they finished flat for the day. Another area that has been strong is the banks. We've been talking about these. They're kind of breaking down a little bit, but not with any huge volatility. I mean, carry down 3 basis points today. Not a big, these can get back to an uptrend in basically one day. So you just have to set your levels and kind of wait for that to happen. And in the meantime, sit on your hands a little bit. So that's today's video. Thank you for watching, and have a great night. See you back Friday morning. We've got jobs numbers tomorrow, so that could also be a catalyst for tomorrow. A lot of times also people don't want to do a heavy amount of risk taking going into a big economic report. Also, Draghi spoke today, so could also be why there's been buyers haven't really rushed back into this market right away. So that could be another reason for it. See you guys tomorrow. Have a great night.